Welcome back to the executive briefing. This week, global markets are reeling from a surprisingly hawkish Federal Reserve, while India's financial landscape is buzzing with mega IPO news and green energy initiatives. From a groundbreaking peace deal impacting oil prices to significant corporate shifts in tech and finance, we are unpacking the stories that matter most for your portfolio. Get ready for an in-depth look at where the smart money is moving. Let's kick things off with the US Federal Reserve, where newly appointed Chairman Kevin Warsh made a dramatic debut, sending shockwaves through the bond market. The Fed held rates steady, as expected, but Warsh drastically pared down the official statement, crucially removing any mention of a cutting bias. This move, combined with signals from several Fed officials pointing to a possible rate hike as early as this year, not just 2026, sparked an immediate surge in rate hike bets. The 2-year Treasury yield, a sensitive barometer for short-term rate expectations, rocketed higher, reflecting the market's discomfort with this new, decidedly hawkish stance. The initial market reaction clearly indicated that investors did not like what they heard from Chairman Warsh and his team. Indeed, the market's initial hopes for an easy money chairman seem to have been dashed. Legendary investor Jeffrey Gundlach was quick to point out that Warsh is clearly not the dovish leader many had anticipated. Analysts are now closely examining Warsh's newly formed task forces within the Fed, which are seen as the key to understanding his long-term policy vision. Adding to the hawkish chorus, Goldman Sachs's Jan Hatzius suggested that the Fed might need to hike rates as soon as September, reinforcing the view that the era of aggressive easing is firmly behind us. This marks a significant pivot from previous expectations and will undoubtedly shape market sentiment in the coming months. Shifting gears to geopolitics and commodities, a landmark development this week saw former US President Trump and Iran's President Pezeshkian sign a memorandum aimed at ending their long-standing conflict. This peace deal immediately reverberated through the oil markets. Following the news, crude oil prices fell sharply, driven by the International Energy Agency's forecast of a supply glut next year. The prospect of the Strait of Hormuz, a critical shipping lane, fully reopening without tension in the coming weeks also eased concerns about shipping backlogs and oil pressure, contributing to the downward trend. We also saw US gasoline prices fall below $4 a gallon, a welcome relief for consumers as the Iran strain eased considerably. In contrast to oil's decline, gold experienced a jump this week. The precious metal found support from the optimism surrounding the US-Iran peace deal, which typically reduces safe haven demand but here countered the otherwise hawkish stance from the Federal Reserve. Investors weighed the potential for global stability against the implications of higher interest rates, ultimately finding enough reason to push gold prices upward. This demonstrates the complex interplay of geopolitical developments and monetary policy on commodity markets. Now, let's turn our attention to the vibrant Indian market, which continues to make global headlines. The biggest story this week is the impending IPO of India's largest stock exchange, the National Stock Exchange, or NSE. This long-delayed listing is finally gathering pace and is poised to create a staggering $2.6 billion windfall for its top investors. Reports indicate that global financial giants like Morgan Stanley and Temasek are set for a massive payday from this megalisting, underscoring the growing attractiveness of India's public markets for international capital. This IPO is not just a listing, it's a statement about India's deepening financial infrastructure and its capacity for high-value market events. Adding another layer to India's growth story is its significant push into green energy. SCD, a prominent player in sustainable energy development, is set to develop India's advanced 2G ethanol biorefinery. This ambitious project will receive substantial financial backing, specifically a 150 crore rupees government assistance under the PM Jeevan scheme. This initiative highlights India's commitment to reducing its carbon footprint and boosting its domestic biofuels industry, creating both environmental and economic benefits. Such government support for cutting-edge, sustainable technology signals a strong future for India's green economy sector. The optimism surrounding India isn't just limited to corporate listings and green initiatives, it's also reflected in market sentiment. Global financial powerhouse Citi recently issued bullish calls on India's inflow prospects, following recent policy moves by the Reserve Bank of India. This indicates strong confidence from foreign institutional investors in India's macroeconomic stability and growth trajectory. The RBI's actions are clearly being interpreted positively by global analysts, suggesting continued robust FII flows into Indian equities and debt markets, further bolstering the nation's financial strength. However, it's not all smooth sailing. The Inside India newsletter recently shed light on the ongoing AI debate within India, criticizing local efforts as too slow, way too small, especially concerning curbs on advanced AI. This comes at a time when global AI giants are pushing for collaboration. On a different note, India's geopolitical standing continues to strengthen, evidenced by the Trump-Modi bromance being back on display during their meeting on the sidelines of the G7 summit. These high-level diplomatic exchanges underscore India's growing influence on the global stage, even as it navigates its own internal tech challenges. Now for our corporate spotlight, starting with the chip sector. Intel saw a significant surge, climbing 9% after former President Trump announced that the company would partner with Apple on US chip design. This potential collaboration, aimed at boosting domestic semiconductor manufacturing, provided a massive catalyst for Intel's stock. However, JP Morgan Chase issued a warning, suggesting that the broader chip stock rally, while impressive, poses a risk of market tantrums should growth expectations not materialize. In space news, SpaceX added longtime Elon Musk ally Roelof Botha to its board, a move seen as strengthening its governance. Despite this, SpaceX shares held steady after a robust three-day rally, indicating some consolidation after recent gains. Moving to other significant corporate headlines, the CME Group, a global leader in derivatives exchanges, announced that its long-standing CEO, Terry Duffy, will step down in 2027, with CFO Linnae Fitzpatrick slated to become the new CEO. This leadership transition signals a strategic continuity for the exchange. In a more confrontational move, CME Group also declared its intention to sue the CFTC over the regulation of perpetual futures, setting the stage for a major legal battle in the financial industry. In the rapidly evolving AI landscape, Google Gemini co-lead Noam Shazir made headlines by leaving Google for rival OpenAI, a significant talent migration in the competitive AI sector. This comes as CEOs of Anthropic and Google DeepMind united at the G7 calling for a US-led AI coalition, emphasizing the global race for AI dominance. Beyond the US and India, broader global capital flows are also drawing attention. Wall Street banks and foreign borrowers are increasingly rushing to tap China's cheap money, leveraging its relatively low interest rates. This trend is further supported by Hong Kong's move to launch China bond futures, aiming to promote the yuan's international use. However, China's domestic market faces headwinds, with its stock gauge nearing bear market territory amidst weak growth figures and a tech sector slide. This presents a nuanced picture of China's economic influence, attractive for capital borrowing, yet facing internal challenges. Meanwhile, Legendary investor Jeremy Grantham recently offered his insights on how to tell if a market bubble is about to burst, a timely warning given current market valuations.